Hi there. Do you understand the power of compound interest when combined with an annuity investment? Well, by the end of this video, I'll make sure you completely understand that before you go signing on any bottom line. My name is Michael Malone, and for the best annuity advice and information, do be sure to subscribe to my channel here, and then also click on that notification bell so you'll be notified when I upload other new videos as well. Now let's talk a little bit about compound interest in general. Compound interest, let's say we have $100 that we put into an investment. In that first year, let's say we have an interest rate inside of that investment, let's use 7%. So if we have put $100 into this investment and we know we're going to get a 7% growth that year, maybe some type of a fixed investment, then we know at the beginning of that first year, as we just look at the generalities of compound interest, that $100 with a 7% growth is going to grow to $107. That's pretty straightforward when it comes to that first year. But when we're talking about compound interest, what that means is that in the second year, in the third year, in the fourth year, we're going to get that 7% interest, not only on the original $100 that we put in, but also the interest that we've already had grow inside of that investment. So let's just very simply go from year one to year two. So in the first year, we had our $100 with the 7% interest grow to $107. Now, if all we did, and we didn't have compound interest, all we did was add another 7% that year on the original investment, we'd say, hey, that $107 is going to add another $7 to $114. But that's not compound interest. In that case, we didn't get interest on our interest. So remember, with compound interest, we're going to get interest not only on that original $100, we're also going to get that 7% interest on the $7 we earned in the year before. So in the second year, instead of that $107 going to simply $114, we're going to have that $107 go to $114.49. So that may not sound huge when we're talking about $100, but when you're talking about maybe tens of thousands of dollars, and you're not only talking about 1 year and 2 years, maybe you're talking about 10 years or 15 years or 20 years, compound interest can be very powerful. So that's kind of the generalities when you think about compound interest when looking at how it may work with an annuity. Now let's talk a little bit more about using that compound interest inside of, say, an income annuity. Inside of that income annuity, you may have something called a guaranteed retirement income benefit. When we have that type of guaranteed retirement income benefit, the way that compound interest can really help a guaranteed retirement income benefit is in the same way that we just talked about, is that interest is compounding every year. And I'll give you another way to kind of look at that when you're looking at this compound interest inside of an income annuity. What that really means, if we use that same 7% interest rate, what that really means is that your guaranteed minimum income benefit, your guaranteed retirement income benefit, is going to double every 10.2 years. So if you are 10 years out, say, from retirement, and you're allowing that guaranteed retirement income to grow with compound interest, in this example at 7%, then we know that over those next 10 years, that guaranteed retirement income benefit that you have inside that annuity, over that next 10.2 years to be technical, that guaranteed retirement income benefit is going to double. And then every 10 years you wait after that, it's going to double again. So depending upon how far out you are from your retirement, that compound interest inside of an income annuity with a guaranteed retirement income benefit can be very powerful. And you know, if you'd like to have an annuity designed really around this compound interest and having that compound interest inside of the annuity, if you'd like to have one designed uniquely for you, do feel free to click on the link down below to apply to become my client. And then once you're done watching this video, I would recommend checking out the other video that I've created called Fixed Annuity versus Variable Annuity. And the reason why I would recommend checking out that video is obviously I've been talking a little bit about a fixed interest rate here, that 7%. So I just want you to have a better understanding of what a fixed indexed annuity looks like in comparison to a variable annuity that kind of fluctuates a little bit every year. So I'd recommend checking out that video, and I will include the link to that video in the description down below just to make it easy. Now, I mentioned kind of the effect that compound interest can have on your guaranteed retirement income inside of these type of income annuities. And I think it's going to be important for you to kind of understand a little bit how that guaranteed retirement income works as well. So I want to share that with you here as we wrap up this video. Guaranteed retirement income, when you look at these income annuities, basically what that means is you're going to have a contract with an insurance company. It's the insurance company that's offering you these types of annuities, and that insurance company via a contract is guaranteeing your retirement income. So that guaranteed retirement income, what that means, just to kind of touch on it a little bit, is that means when you turn on that income source once you're in retirement, it could be at any age, it could be at age 60. Well, you typically want to be over 59 and a half. You want to have reached that retirement age, but you may turn it on at 60 or 65, whenever you would like. But when you turn on that guaranteed retirement income, what that means is that the insurance company is guaranteeing that you will have that retirement income for the rest of your life. So from whenever age you turn it on, that guaranteed retirement income is going to be there. If you pass away at age 85, you're going to have it for all those years. If you pass away at age 100, you're going to have that guaranteed retirement income for all of those years. So that's really the way that this guaranteed retirement income benefit works, that I talked about earlier, that may be growing over the years due to this compound interest. And the one other thing I guess I would share with you in regards to that guaranteed retirement income, obviously we just chatted about how that can be there for you for the rest of your life. Depending upon the annuity you're looking at and the benefit that you're using, that guaranteed retirement income may even continue on for your spouse after you're gone. So let's just say, as an example, you lived to that age 85 that we talked about just a moment ago. So maybe you turned on your guaranteed retirement income at age 60, you lived till age 85, you had that guaranteed retirement income for your entire retirement years, but when you passed away at age 85, again, depending on the annuity you use, that guaranteed retirement income may continue on to your spouse if they're still here and still alive. So if they continue to enjoy their retirement for another 5 years, 10 years, 20 years after you have passed, that guaranteed retirement income may continue on to them for the rest of their retirement as well. So I definitely want you to kind of understand how that works. So once again, like I mentioned earlier, if you would like to have one of these types of annuities with this compound interest building towards your retirement for the years, if you'd like to have that type of annuity with the guaranteed retirement income that we were just chatting about designed for you, do feel free to click on the link down below to apply to become my client. And if you've liked this video, please give it a thumbs up, subscribe to my channel here, and share it with a friend. Thanks for watching, and I truly do hope something good happens to you out there today.